China digging in its heels as well. You got President Xi Jinping telling a cheering crowd that we came to the startling point of a long march to experience the Red Army's departure at that time. It is a new long march now, and we must start all over again. Joining us now is Paul Richards, Medley Global Advisors president. Long march. How do you price that in? And the chart I want to show you is JP Morgan saying, you know, the bull and the bear case for the S&P. Everything works out great, 3,200. Nothing works out, you're looking at 2,550. What do you do with that chart? Right now,
you don't do a lot. When that tweet came out 2 weeks ago, you know, my view at the time was that you could see 4 to 5% on the downside. We had that, now we get stability. I think we're in a range, and the reason, Alex, is that I think you've got 5 weeks to go. It doesn't surprise me that this rhetoric is
5 weeks to go because we get to the G20.
Correct. Okay. Osaka is the day, in my opinion. And I think you've got to get the two big boys in the room. The hardliners are really in their ear right now, but it's going to be about Xi, it's going to be about Trump sitting down the same way that they did in Buenos Aires. If you're ever going to get a deal, you're going to need those two to look at each other face to face. And my view is, look, you've got 5 weeks to go. It's going to be really easy to have negative headline after negative headline, and you'll get it. And you can see these two digging in. But my sense is that within about 2 weeks, we're going to see some de-thawing. And I think if we don't, then we've got a real problem in June.
Yeah, but is that a substantive de-thawing, or is it what we got in Buenos Aires? I mean, we had Buenos Aires, all right. They got together, they agreed that they'd keep talking. So suppose G20 happens, they come away and say, you know what, we'll keep talking. We're not going to take the tariffs off. We're going to keep...
I guess they'll be talking.
How will the markets react to that, though? Is that enough for the markets?
I don't think that will be enough for the markets. I think in December it was enough, but then we had the Fed hiccup. Okay, so we can take the Fed out of it, hopefully for now. No, this will be about pricing this risk, and time is up. Why? Because it's a one-year battle. You know, these guys, these tariffs were put in place close to 12 months ago. This market cannot withstand 25% tariffs. It's funny just driving in here today, looking at truck after truck on the highway. And I'm sitting there looking at this thinking, if this gets worse, the US economy will not withstand it, despite all the bravado, and the global economy won't either. So this needs resolving. So we are now in a 5-week timeline.
Well, if it really is make or break in 5 weeks, hasn't it gotten that much more difficult? We've put the sanctions on Huawei. This morning reports that there are 5 more companies went. I mean, that is really upping the ante, because it's very hard for President Trump to climb down off of that by saying, if you buy more soybeans, I won't care about our national security.
Right.
That's a tough one.
It's a very tough one. And look, let's face it, you've got the risk of Apple, you've got the risk of the currency, there's the ongoing talk around what do they do with their treasuries. This thing will just keep elevating, in my opinion here, David. But there will be a point where they have to give, because both economies, and actually the other way I'd look at it too is, when you look at President Trump, if he wants to get re-elected in 18 months' time, he needs this thing getting resolved. And I think preferably by Labor Day, but ideally for the market, it needs to be done by the end of June.
I feel like we're talking about the U.S. economy and what it could do there, but Mohammed Al-Arian wrote in a Bloomberg opinion piece more about China, and he said the best that China can realistically hope for at this stage is a series of ceasefires that avoid serious damage to its economic growth, financial stability, and broader development process. Everyone talking about that 7 handle there for the dollar yuan. I mean, is the bigger risk actually in China?
I think the bigger risk is for both. I can respect his view, but I don't necessarily agree. I think that the stakes are high for both. The US is coming from a position of strength right now because the economy feels so good. The economy won't feel good if we get another Q4 meltdown in the stock market, and that to me is the summer reality. Per what you were saying earlier, 2440 or say 3200 on the S&P. We're sitting here right now in a holding pattern. But you know, and we think we're being lulled into a sense of false complacency with volatility being down. That won't last. Something will give.